everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. Steel spot prices have fallen significantly this week. Domestic hot-rolled coil, HRC, spot prices dropped by 50 yuan ton and rebar prices declined by 60 yuan ton. We are currently in a macroeconomic lull, but the prolonged US government shutdown has pushed the US dollar index above 100, becoming the main factor pressuring commodities recently. Domestically, following the easing of China-US relations, there remains room for reserve requirement ratio, RRR cuts and interest rate reductions. On the industry side, weekly output of the 5 major steel products decreased by 185,500 tons. In contrast, due to the recent resumption of some electric arc furnace EAF production and increased daily scrap consumption, molten iron output has further declined. Among them, HRC output saw the largest reduction at 54,000 tons week, while rebar output decreased by 40,500 tons week. Tangshan has been under production restrictions since November 3rd with no clear timeline for resumption, so output is expected to stabilize in the subsequent period. On the demand side, this week's demand fell by 495,100 tons compared with last week. Affected by price declines, the apparent demand may be lower than the actual level. We will monitor the recovery of demand next week. Currently, there is no indication that demand has peaked, but the upside potential for demand is not optimistic. Regarding inventories, the destocking of the 5 major steel products has slowed, with an overall weekly destocking of 101,700 tons. And both social inventories and mill inventories have decreased to a certain extent. By product, rebar inventories dropped by 99,800 tons, while HRC still faces inventory pressure as social inventories continue to increase by 40,900 tons. In summary, the steel market performance weakened this week. Mid to late November will gradually enter the off-season for steel demand. Currently, the alignment between steel output and inventory destocking is not particularly ideal, and demand is largely influenced by exports such as billets. If subsequent demand declines, the market is concerned about the speed of overall inventory accumulation, limiting the upside for steel margins. Despite the current strength in raw material prices such as coking coal and coke, steel prices are unlikely to rise driven by costs alone. From the current output perspective, steel production has already started to fall. Only when inventories destock to a reasonable level can the upside space for steel prices open up. Otherwise, under the current supply-demand dynamics, the upside for steel prices will be relatively limited. If steel mills resume production further and some steel products approach the break-even point, pressure on the raw material side will increase further, potentially leading to negative feedback. Therefore, after the recent price declines and production cuts, steel prices may stabilize in the short term, but mill margins will struggle to expand and will be mainly supported by costs. For procurement, it is recommended to consider increasing some inventory positions at low prices, especially for products where mill margins are inverted, such as certain special steel grades and billets. In the short term, the black market remains in a state of clear industrial trends and differentiated operation, waiting for macro-driven variables. Weak demand reality and inventory accumulation expectations restrict the room for price increases, while relatively low valuations, cost support, and macro uncertainty provide a floor for prices. Short-term policy guidance is not strong, and the market has responded weakly to next week's production cuts and the new capacity replacement draft. Declining steel profits and production cut expectations remain strong drivers. In summary, steel prices have maintained a weak stability recently. For product selection, consider partial procurement of special steel grades and billets at low prices. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.